Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Erik Wetterling. We're going to be recapping a recent conference Erik was at in Europe, mining investment focused, as well as two copper companies that have Erik's attention, both in South America. First things first here, Erik, the Deutsche Goldmesse Conference in Germany. This conference put on by our friend Kai Hoffman. Look, this conference is one of the newer ones out there. I know you had the opportunity to speak at the conference. I want to get your take on it because I always find it interesting to hear what the vibe is like over in Europe. Generally, even more supportive of the resource sector over there, especially in terms of a retail audience. What was your takeaway from this conference in terms of attendees and also companies that were there?
Yeah, I mean, from my perspective, I really liked it. First of all, it was convenient that I was staying at the same hotel as the actual conference, and it was easy to get to. And of course, I mean, that's not a long flight either from Sweden to Frankfurt. So, I mean, that makes me biased in the sense of, how I enjoyed it. But I would say, I mean, I like the networking. It felt very, boutique-y, let's say. I mean, PDAC in comparison is like a zoo. It's like you're having a big problem just finding people. I mean, let's say a company was booked. I mean, you were going to run into the CEOs at the show anyway. And once I spoke to the CEOs, they were very happy with it. I mean, especially I asked the ones that never been there before. This was the first time for me as well. And they were really impressed by the, meetings they had, or the one-on-one meetings, that typically the meetings they had, the attendee was very, potential investor, I should say, was very read up, asked a lot of good questions. I, of course, have never been in the opposite side, sitting in the CEO chair, so I don't know what the norm is. But they really liked it. And I think, I mean, that goes for most people that I talked to. I mean, yeah, again, they really liked it. I actually got some people come up to me, introduce themselves, who, follows me on Twitter or whatever, and live in maybe Frankfurt or Germany and had taken the time to get there. So again, it's like very accessible, I was going to say. From a networking perspective, I thought it was great. Of course, for me, there were a bunch of people on mining Twitter, for example, and a lot of ones that I actually think are really good investors. So they're not just, talking heads, or if that's one way to put it. So, I mean, I was trying to pick the brains of a lot of people, not just CEOs, also people who kind of do more what I do, and I, respect their opinions. So I would say I got a lot out of it, more so I would say than PDAC.
Well, Erik, I know that you also spoke on stage about critical minerals, but one of the big focuses from you when we were just talking off mic is more of a focus on copper. And I know you typically are more focused on gold stocks and maybe a few silver stocks and a few base metals, but you really kind of caught the copper bug at this event, and we're looking at a couple companies. Maybe just speak to us first about the metal copper, why you're getting more interested in it.
Yeah, sure. I mean, I've seen Robert Friedland, for example. He's been pounding the table on copper for a long time. There's a bunch of forecasts out there with look how big the supply deficit is going to be in, 2025, 2026, and get worse. Of course, the thing is, I kind of heard the same when lithium was near the highs. There's it started dipping, and, you had a bunch of experts like, no, this is just a short-term dip. This is here to stay or whatever. I mean, copper hasn't done like lithium, obviously, and it's not as abundant as lithium. But I always take all the forecasts, let's say, with a grain of salt. I mean, my main thing, I guess, when, I had the panel was that, as Pierre Lassonde says, that he believes copper is the only true critical mineral or metal, in the sense that almost regardless how the EV revolution is going to go, how the AI revolution is going to go, we're still going to need more and more copper with just, simply infrastructure and just having whatever. It's like India electrifying or building out, doing a smaller version of China, for example. So, I mean, from a risk reward perspective, I like copper because it's not tied to just one theme. There's a bunch of themes that are like twists and maybe can ramp it up even more so, in comparison, for example, to lithium, where it's like, I guess it's mostly about the, EV battery thing. So it's like, that's the main theme. So of course that's one theme with huge leverage to the demand for lithium. Whereas, I mean, we have been mining lithium, it's just that it exploded. So the question is, I mean, if the EV revolution takes a hit or they find some substitution for or whatever for lithium, I mean, then you could kind of have a problem for copper. It's like there's no easy substitution, and there's potential for like different themes to be working on this demand side, which could be good. And of course, as you all know, it's not easy to permit or fund a large copper project. So I kind of like it from, again, a longer term perspective, simply based on the risk reward. But at the end of the day, I want the companies to be cheap. I don't want to pay for the blue sky to already be here if it's not here.
Fair enough, Erik. We have heard a lot of positive comments around copper, and it makes sense when you look at some of that supply demand, but let's filter down into some of the companies. One being Hot Chili. This is traded on the TSX Venture Exchange under the symbol HCH. Couple different business cases here. One being the Costa Fuego project, a copper gold project in Chile. Another being a water supply aspect that the company has licenses for. And water can be hard to come by in South America. It's needed for drilling. It's needed for actual mining as well. With these two kind of balancing drivers for the stock, break down how you view Hot Chili as an investment.
Right. So, I mean, I took a look at Hot Chili. Well, I've known about them for quite some time, but never really followed it up. Because back then, I think I heard about it maybe 2-3 years ago, and copper was not really on my radar. And I gotta say, they don't have the most professionally sounding name, Hot Chili. So who knows, maybe that kind of put me off there for a while. But I started looking into them recently, and it's like, okay, pretty quickly you find that there's like a water treatment or water access angle to the company. It's like I love, more the idea of margin of safety, not paying for the upside, whatever. So just the copper project looked good because it's in Chile and it's not at 3,000-4,000 meters high. It's actually, I mean, relatively low capex. They have around 1 billion tons of resources, and the economic study looked pretty good, better than some others I've seen at least. But apparently, and I've heard about this before, that's like Chile is getting harder because the water is such a big issue, and it's just getting worse and worse, kind of. And of course, if you don't have water, you don't have a mine. And so I saw some recent news, them talking about, I think they got something granted, something with the water access thing. And then I watched some presentations, listened to interviews with Nicole Adshed, who's on board with the company. And I mean, she sounds really smart, first of all. And then I kind of got a sense of, hey, maybe this water angle is like, provides enough margin of safety that, who knows, could be worth more than the actual market cap of the company. And in that way, if that's the case, I mean, you might actually get the copper project for free, and you obviously have those synergies that if they have secured water, makes their project worth more. So it's like the two pieces of the pie, I mean, they kind of feed into each other. And then there's like, I don't know how many, but there's a few at least really large porphyries in the Atacama Desert area who also needs water. And for those huge projects, I mean, if you can speed up the time for development by, let's say, if you made a deal with Hot Chili on their water, or they at least, or even more so perhaps, allowed the development because now there is some access to water. I don't know what the strategic value would be for that, but just thinking from a discounting perspective, if you can speed up a $5 billion project, let's say, by 5-7 years, because you have, Hot Chili is basically laid the groundwork for access to water. I mean, again, I'm not going to speculate on numbers and stuff, but that's like what really got me interested. There might be a very unique twist in this particular case. So if you like copper, you like the project, and there's like the side business that could be worth quite a bit. In that case, I think the risk reward just not only does it have synergies, but it's like, just lowers the overall risk reward. So this is one of few copper developers I've started buying because, again, as always, I might be wrong, but I just find that water angle extremely interesting, and it doesn't seem that they get much credit for it in the market. But they were able to raise 30 million recently, so I guess someone is paying attention, but not retail perhaps.
Yeah, Eric, that's pretty interesting with the water angle. If nothing else, it gives them optionality, and it may actually help out other copper projects in Chile. And it looks like the company has, first half of this year, they're looking at doing some kind of a base case for what the water is worth. But it looks like the big news this year is they're going to have a PFS out in the second half of the year, so wrapping more economics around the project. And they got a 30,000-meter drill program. Are there any other catalysts that you're looking at in the company or when you spoke with management that have you excited about it, just on the copper side of things?
I actually haven't spoken with management yet. So I've just been, my approach typically is that if it's a really good case, you should really get interested just from reading the presentation. I haven't really found that, okay, I didn't think this opportunity was anything really. And then when I spoke to management, they're like, oh, no, I got it totally wrong. So I haven't, let's say, gotten to that part yet, and it's not become a big position yet either. And I guess to me, it's like the risk reward is compelling enough that I don't feel I need to speak to management first, because I know there's more people on board, for example, but I'm for sure going to be looking to do that. So, to answer your question, I don't have any other specific catalyst I'm looking forward outside of that, because I think what you just described are going to be huge anyway. And they have one economic study done already, so it's not going to go from zero to or having an economic study already. Sure, it might change from the other economic study, but I think that's good enough for me now. And if I get a bigger position, I probably am going to look to talk to management.
What about this resource, though, and that PEA that was completed here? It did show the NPV of over $1 billion US, $1.1 billion. CapEx, just over $1 billion US. Post-tax IRR, 21%. This project does seem quite leveraged to the copper price. The overall, I believe, resource grade is right around 0.45 copper equivalent, but they do have a higher grade component that obviously they would go after first. Have you dove into the underlying resource? Do you have any assessment on how much of a catalyst this could be if you just take that water aspect out of it?
No, I can't say that I have. So, if I'm relatively new to copper, I'm like brand new to the Chilean water business. So I actually have no idea. Again, I'm just letting typically, price dictate it, in a sense that, okay, on paper, might be worth $1 billion. Okay, they're trading for 100 million. Okay, we know the water business is probably worth something, because I've talked to people about the water situation in Chile, and they're like, yeah, this is a big deal. So in my mind, it's like I almost find it impossible that I'm overpaying without knowing the, let's say, details. And if you know the study, for example, that okay, every 10 cents move up in copper adds 100 million to the MPV. The leverage aspect is pretty cool. And then also it's like, yes, but there's other trading sardines around in, a bunch of metals where it's like, yeah, at face value, it's moving up, whatever, how much. But it's like, there's no way they're going to actually build it. And that would probably even be the case here, maybe, if it wasn't for the fact that they're kind of securing they're dictating or steering their own fate by actually having thought about securing water like 7 years ago. And now that's bearing fruit. And also is, relatively low capex, shouldn't be as technically difficult to build relative to, again, some of these other copper projects that are like 3,000-4,000 meters high, where you gotta, bring a 150-kilometer pipeline from the coast over mountains and all that. So I just like the fact that it looks like relatively simple, relatively low capex, and one of the maybe biggest hurdles, which would be water at this time in Chile, they're bringing that in themselves. So, to me, I don't think, let's say, a no-brainer, if one could call it a no-brainer. I don't think it needs precision. If it needs serious precision, getting all the details right, I don't think it's probably not a good risk-reward bet to start off with.
Okay, Eric, we'll appreciate the update on Hot Chili. Let's also pivot over to one other copper company that has your attention, and that's Hannan Metals. It trades on the TSXV under the ticker HAN. It's a company that has two projects copper related in Peru, also a zinc project in Ireland. So they've got a couple different projects on the go. Their flagship is their San Martin, where they have a JV with the Japanese consortium JOGMEC, and then they also have the Valiente project. Maybe walk us through the value proposition here in Hannan Metals that you see.
Hannan I've known about for quite some time. I remember when they discovered the sediment-hosted copper up at San Martin. That was featured on one of Crescat's corporate updates. This was maybe, 2 years ago or something. And that's obviously an exciting thing. And they got JOGMEC, I think they're kind of state-owned or something. I mean, they're Japanese, so they're going to be funding it because it seems that this is one of those large projects that are kind of difficult to push through as a junior. But of course, like always, I mean, if they were lucky enough to find some kind of Cooper Chief freelance stuff there in Africa, if they find something similar, of course, that could be, big bucks, but it's probably, a long shot by definition. That one should believe at least that it has all the right characteristics. But that got me interested in it. I think I bought shares way back when. But then they also have the Valiente project, as it's called now. And I spoke to the CEO. He's a Swede. Well, no, the CEO is actually not a Swede. They have a Swede on board, which I talked. And I've talked to Michael Hudson as well, because I'm invested in Mawson. And he's the head honcho here as well. And I like Michael Hudson a lot. So does Pierre Lassonde. So I'm thinking, okay, they probably know what they're doing. So after talking to Lars and Michael, I got, okay, I'm starting to appreciate what you have both at San Martin and now at Valiente. That basically they could have found another copper porphyry district, because it's typical, they tend to show up in clusters and they have a bunch of targets and they're large scale projects and they have, outcropping mineralization, all that. So they have a lot of near surface smoke, have a bunch of targets. So it's like in my book, the way I look at it is that, okay, San Martin obviously could be a company maker. I mean, if they do end up proving up a new sediment-hosted copper system, because, they've staked a huge area up there, and they're finding, with outcropping over kilometers and kilometers. Obviously, that could be a company maker. But at Valiente, it's like, yeah, well, they have, I don't know how many targets they have. Lars went through all of them with me, basically. But it's a long list, and there's a lot of details that I don't remember when they're finding skarn and, maybe some low sulfidation epithermal thing. So the main point for me is like, okay, these are good people. They got votes of confidence from both JOGMEC and Tech. And these are very large prices. So to me, that looks like a pretty okay risk-reward bet. There's like, what's the odds of success? I don't know what it is at San Martin, and I don't know what it is at Valiente. But they're going after huge prices. And of course, they don't need everything to work out, blue sky to work out. But it's like if there's a 10% chance that either one of these areas, and they have even more projects, actually work out, I think it could simply go up a lot. Because, hey, if copper does well and they make a discovery, that should be good. If copper doesn't do too well and they still, let's say, have a good discovery, I think it could do great anyway, as we've seen in some of the copper exploration stories. So it's simply a high risk, high reward bet where you get, again, third party validation from two majors. You have a team that's like people involved who Pierre Lassonde likes. And I'm not smarter than those people. So almost by definition, they have highly prospective areas. And that's how I treat it. I'm not going all in on Hannan Metals. I have been buying shares, and it's just part of my copper portfolio. And I don't think I need to know every detail about every single target, because I'm mostly betting on the people and the majors involved in this case. And this is one I actually have also brought on as a banner sponsor. So I'm twice biased, and I see it as obviously a bit more high risk than Hot Chili, for example. So this is more high octane, good old fashioned early exploration play.
Yeah, that's a great way of summarizing it there, Eric. And you're right. You don't need to know about every single target or even the finer details of the projects. You just need to follow along with the drill results and make sure that they're at least hitting something that keeps you interested. Let's talk about the share price, though, because ever since March, even when there wasn't really any news out at the beginning of March, the stock went from a range of about 15 to 20 cents the whole way up to around 45 cents. It settled down right around the 40-cent level. This is the highest value that this stock has traded since the middle of 2021. Does this change your investment thesis at all on this, since it has gone up almost 2 times or more than 2 times simply on the back of not a whole lot of news, but maybe just more interest coming into the stock?
Yeah, I mean, if I could go back in time, of course, I would have wanted to buy shares at 20 cents or even 15 cents or whatever the low was. But not really, because the way I see it, I was going to say, is like if the risk reward doesn't make sense at whatever price, it just doesn't make sense. And again, it's like if you only pay, let's say, 25 million for the company, would that make it an even better risk reward than 45, which it is now? I mean, yeah. Of course it would, but I don't look at it that way, because I see some companies where it's like I'm buying in at, let's say a stock is up 100%. Now I'm not saying a lot of things have changed, but then people who were in before it ran up 100%, they're like, yeah, I was much smarter, or look at me, I was in before the 100% run. But it's like, I mean, sometimes they're even more risky at a lower price because some de-risking event happen, and all of a sudden you have much less risk, but you pay up 100%. That's why I keep talking about, typically, I'm more in post-discovery plays. So my short answer is I don't really care about that. I don't care about what happened. I'm mostly interested in what could happen and what price I'm paying for the bet. If someone is already up 100%, I mean, good for them. Maybe it was just simply way too undervalued before, and now it's getting back to a reasonable betting range. But yeah, my short answer is I don't care. And it's like I've had a lot of stocks that just simply rode down too cheap, and if nothing really happened, I hope I bought more of it. And sometimes some news happens that actually makes them go up, but still the news was worth more than the share price. So yeah, again, my short story is, as a value investor, I don't pay attention too much what has happened. I care what price I'm paying the bet and what could happen in the future.
Yeah, to that point then, Eric, how do you go about comparing Hannan Metals and Hot Chili? Market cap-wise, Hot Chili, little over $100 million, but they have a more de-risked project. They also have that water angle. Who knows what that's worth? Hannan Metals, they have some majors that are invested in them, but they're already pre-discovery, and they're up to about a $40 million market cap here. So do you lean a little bit more? Do you find more safety in Hot Chili then compared to Hannan Metals for only half the market cap, but no real underlying hard asset there?
Yeah, that's a really good question. And I would say that, like, typically position size wise, I let the margin of safety be the main correlator, let's say. Because if I'm already underpaying for something, then at face value there's no risk. Price could go down even more, but like sooner or later it's gonna gravitate towards fair value. And okay, in the case of Hannan, they don't really have margin of safety. They don't have a deposit. They don't have, let's say, a water asset either. So yes, I would typically go with a higher weighting towards the one with a margin of safety. Of course, that sometimes can be like misleading in the sense that some junior has, yes, on paper we have margin of safety, but it's actually a crap project. So it's really a trading sardine and no one's ever going to buy that. In this case, I do think Hot Chili has actual margin of safety, and the fact that they have that water stuff is kind of proving up their margin of safety even more. But in the case of Hannan, I mean, as far as I can see, it's a quite tightly held stock. And I typically, again, am not too keen on pre-discovery plays right now, where you can have that situation where it's like, well, I'm buying Hot Chili for double the price, but they are years ahead in terms of, where they are in de-risking, and they already have proven that they have something. But in cases like Hannan Metals, for example, it's like, yeah, you can. I hope people know what you're getting into. It's like, this is an exploration story. That's what it's loaded for. There's no margin of safety. It's gone up probably because, okay, excitement of, hey, copper is, doing well, and if they hit something. And we've seen that a lot of times, like some of these discoveries, if a discovery happens, I think this could really move, given it's like today, 10,000 shares have traded. But even if it goes up in case of a success, like 500%, stuff can happen after that, of course. So this is like way higher risk. What I like, though, is the fact that they have so many targets that are also kind of, you have the technical vote of confidence from two majors that, yes, these are legit targets. It's not just targets for target's sake. A lot of every junior has a target, but this is like the majors are seeing something that's like has a major footprint, and they have quite a portfolio of them. And it's the same kind of with Inflection Resources. I'm not betting on any single target. I just know they have a lot of kicks at the can, and it's just so fun if you're on board when a discovery happens. So I don't know what the chance of success is, but I would have a smaller position, especially if I'm a retailer who doesn't know much about exploration in Hannan than I would in Hot Chili, simply because I do think they have legit margin of safety, not just paper margin of safety. But yeah, I don't know if I answered that in a good way, but yeah, definitely totally different characteristics.
Yep. Hey, that makes sense. It's hard to compare these two, actually, because of the different stage they're in. I just wanted to get your take on kind of the market cap aspect of it all. Erik, thank you as always for your time. We'll post a link to your website, the Hedgeless Horseman. That's where everyone can keep up to date with you. And we'll chat again next week. Thanks for your time today, Erik.
Thanks, guys. And as always, I'm biased.